All right, folks, let's take a look at the three different governing sets of rules depending on how you're doing an audit. And then now you're doing an interim review. So there are three different standard setting bodies. Each provide a template for interim reviews when you did an audit during the end of the year. While there are some similarities, there are some differences we should note. You'll notice you did an audit of a privately held company at year end. Now you're doing a review for interim. Then you're going to follow SaaS's. SARs, when you're only doing reviews at year end and at interim. So both SaaS and SARs are when your client is a privately held company. If you're auditing a publicly held company, but you're doing a review at interim, then you follow the PCAOB. So that's your issuer's rules. If we take a look at the next item, for your private company, SaaS's and SARs, you'll notice you address it, independent auditor's review report, under the SaaS, and you say, we have reviewed the accompanying information. You'll notice, by the way, we're going to note that the review, the conclusion giving limited assurance, will be the last paragraph, not this first one. SARs, that's when you're only doing reviews of the company all year long, and you're going to continue to do review at interim for this privately held company. And you once again say, we have reviewed, and then you list the financials. And then a little bit down below, it will say something to the effect of a review includes primarily, and I'm going to highlight this by showing you after you've highlighted the red in this particular chart. Oh, and there's my man, Sugar Bear. It'll say a review concludes primarily applying analytical procedures and inquiries. You'll note here that we're mentioning the steps in SARs right up front. The steps in a SaaS will be mentioned later, and in the PCAOB report, the steps will be mentioned later. So the SaaS and the SARs will have the conclusion at the end, but they will differ on when you mention the steps. The SaaS will do it later, the SARs will do it up front. So all three reports look the same. When you examine the PCAOB report, it also says we have reviewed, and it lists them. And then it states, based on our review, we are not aware of any material modifications. The conclusion, just like the audit opinion, is in the very first paragraph. The next item we have is we have the management responsibility statement. In a SaaS, note we're going to state the company's management is responsible for the preparation and fair presentation, and we identify the statements. This responsibility includes design, implementation, and maintenance of internal controls sufficient to provide reasonable basis for the preparation and fair presentation of the interim information. So SaaS now talks about management's responsibility. SARs, same thing. Management, or the owners, is or are responsible for the preparation. And this includes the design, implementation, maintenance of internal control relevant to the preparation of financials. Now, those two are when you're dealing with a privately held company. When you're dealing with a publicly traded company and doing a review at interim, you just simply say these interim financials are the responsibility of company's management. And my good friend, Uptown Mike Brown, wants to emphasize that all three interim reports describe the management responsibility in this area. And in addition, SaaS and SARs also include a discussion of management's responsibility for designing, implementing, and maintaining the internal control. We then move on to the auditor's responsibility. And you'll see our responsibility is to conduct our review in accordance with auditing standards. So you're mentioning auditing standards, and now you describe your steps. If you recall, SaaS and PCAOB described the steps later. SARs described it up front. So here, our steps are applying analytical procedures and making inquiries of personnel responsible for the financial accounting matters. It is substantially less in scope than an audit, and at the very bottom, you'll notice we do not express an opinion. We clearly want to state this is not an opinion. Also, when you're doing reviews on a regular basis, including year-end, for a privately held company, you follow SARs. So our responsibility is to conduct our review and engagement in accordance with statements on standards of accounting and review services. And then it states a little bit later, those standards require us to perform procedures to obtain limited assurance. That's the term we've been using. Now, if you're an issuer, that means that you have audited financials at year-end, and now you're doing the review at interim. We're going to follow PCAOB. So we conducted our review in accordance with the standards of the Public Company Accounting Oversight Board. Notice once, just like the SaaS, we're describing our steps. Now, in this paragraph, we're applying analytical procedures and making inquiries of personnel responsible for the financials. It is substantially less in scope than an audit. And at the very bottom, we're describing that we do not express an opinion. Oh, and there's my downtown, Angie Brown. And notice what she's telling us. All three interim reports describe the auditor's responsibility to conduct the engagement. Non-issuers, where you're doing an annual audit, you're following GAS. Non-issuers, where you're not auditing, you follow SARS. And public companies, you always follow the PCAOB. She mentions also that all three interim reports describe the auditor or accountant's review procedures. However, when looking at those procedures, you'll note all three interim reports describe your review procedures. The wording of these procedures is very similar. And you'll note SASs do it in this paragraph, this middle paragraph, as does PCAOB. SARS, recall, did it in the opening paragraph. So the SARS did it in the opening. SASs and PCAOB do it later on in the items. And that's also emphasized in the next one. Similar wording appeared in SARS, but it was in the first paragraph. I think Angie's doing a real good job at helping us there. Let's move on. The next item that we have is our conclusion. For SAS, based on our review, we are not aware of any material modification. SARS, based on our review, we are not aware of any material modification. The PCAOB, hey, wait a minute, there's no conclusion there. That's because the conclusion was in the first paragraph. And I don't know who this old geezer is. I'm not sure. Maybe you recognize him. I don't, or I don't want to. SAS, we had the conclusion. SARS, we had the conclusion. Notice both of those were at the end. PCAOB, the results of your review of interim financials was in the first paragraph. So hopefully this gives you insight into a comparison of all the information and how it's to be handled.